So I will say there's one reason I brought my note card up here to ask you questions. Most of them I know off the top of my head, but there was one that you actually said is a particularly interesting question today, and that is how reliable is the US market on a daily basis given the regular headline risk? How reliable?
Thank you. If you look at the capital markets per se, right, and I think Bill mentioned it, on reliability, I would call it trust. It is a little bit more difficult than like in the past, right? I mean, whenever you wake up, there's news either on tariffs, on Canada becoming the 51st state, tariffs on China, tariffs on Europe, especially then on Germany, France, and others. And I think the reliability also paired a little bit with the interference of the actual administration on the Fed's independency, reacting to inflation and other things, is making it more difficult. Yes, it's causing volatility, but at the end, you always can deal with volatility, despite I truly believe it shouldn't come from an administration, but rather from the capital markets per se and the earnings and the prices you see. But other than that, yes, it's very much about trust these days.
On the tariff front, that's one question. On the Fed independence front, it's another interesting one, given that a lot of the discussion throughout today, let alone the year, has been on how the interest rate differentials in the world are changing in a very, very meaningful way. What does Fed independence mean in light of all that? The pressure the president has really to make interest rates in the US lower in the face of inflation threats?
Look, if you look at the past, right, the Fed always have been at the forefront and, so to say, our safe harbor if it comes to investments, which caused at the end also a structural overweight. If you look at all the indices, right, around the world, MSCI, look at the all-country worldwide index, 70% is on the US equity side. And let's face it, and we had it on here as well with Tim. If you look at the Max 7, right, how reliable are indices at the moment on the one hand side, but on the other hand, coming back to the Fed, I truly believe you need an independent central bank which is reacting to the market environment per se. Also on the rate side, right, we expect another rate by year end. If you look at the European Central Bank, which is a little bit more favorable, they did now a couple of cuts over the quarters. We assume there will be more cuts in Europe, and this will lower to a 2% threshold, which is in line with our growth aspiration in the European Union. So I would truly say, I mean, the new safe haven maybe is not the US right now, but it can be still Europe in terms of replacement on your structural overweight in US equities.
I was going to ask you that Allianz has strong German roots, but as the name implies, Allianz Global Investors. So where does that marginal dollar go? To the extent that investors are looking at places outside of the US, is it mostly Europe, would you say, or is it Asia or elsewhere?
It's clearly both, and I was wrong on the first poll, right? I put all my coins on India, despite its a fantastic country in terms of being the biggest IPO market these days. But we are acting in both China and in India. We are one of the biggest investors in China A, and we have launched our India equity fund quite successfully. However, if you look at Europe and the price earnings at the US, if you compare this, which is now at the ratio of 24, and if you look at the 10-year ratios, right, and the average, it was 19, so you really see that US equities always have been overpriced. Europe is quite affordable, quite cheap. By the way, we are great in making cars, not only insurance and asset management, but if I look around, all the ladies with the LVMH bags, right, so thank you for continuing growing our GDP in Europe. We desperately need it, so come over. It's reasonably cheap to make a vacation. However, on a more serious note, I truly believe that you will see this in the price earnings revision, that Europe going forward is a very good place. It's very cheap, and it is more stable than you think, because we also discussed it earlier. Europe always needs somehow a crisis to evolve, right, and get better and reinvent itself. So if there's one good thing you can say at the circumstances right now, all the pressure coming from Asia being really the growth engine of the world, having an administration in the US which is reinventing itself in its partnerships and questioning partnerships which have been lasting for more than a half century. So this is really, like it or not, a good thing for Europe, because you have seen what happened on the financial stimulus, right? when Europe came with the Germans saying we're going to spend 500 billion on defense and infrastructure, you have to take this into account as well. So I truly believe there's great opportunities within Europe, not only Germany.
An interesting point that has been made to me by a number of investors that we've underexplored on this stage so far, with the tariff strategy from President Trump in the United States, do you think Europe will link more closely with China at the end of the day?
Look, I truly believe Europe needs a pragmatic approach with Asia and needs to get a little bit more independent. We had been clearly profiting from a peace dividend, right? I mean, it had been mentioned by Bill again, US taking care on the defense side within NATO. There had been a structural underspend even in my home country. And if you look in Europe, there's also indifferences on the 2% up to 5% of GDP investing into military defense, and we are catching up on this. But if you now look at Europe per se and Germany, we already had a quite fair deal with China in terms of import and export, right? China had been one of the biggest importers to the US, but also into Europe and the other way around. So I truly believe Europe needs a more pragmatic way, and I think this is an opportunity for us to step in where others do step out.
You mentioned a little earlier, well, you questioned the safe haven status of the United States. As such a large investor, more than 600 billion in assets in US dollar terms, where does the dollar go?
That's a tough one, and most probably all my people or my staff will kill me if I come back home because we're on file and it's broadcasted as well. If you look at the US dollar, I mean, look, there is a couple of folks out there. This is not our Allianz Global Investors house view, just to be very clear, who said, well, euro, dollar, 140. I don't think so, but 120, 125 can be very realistic.
So how do you think about it compared to other currencies like the yen?
I think the yen will profit, and if there's one concern you may have is really right now, if you look at the recent developments, is maybe the capital markets underestimate the possibility of stagflation, which is one thing, which also will mean that given what we described earlier on the Fed piece, on the dollar, look, when I joined that industry 25, 30 years ago already, everybody told me, Tobias, the de-dollarization is an ongoing piece, the rise of Asia. We haven't seen this, but I'm pretty sure over the next 5 years, we see that trend really getting more and more realistic in terms of Asia, and maybe also saying that the yuan becomes somehow a reserve currency, because one thing is sure, right? And also what you can observe, right? If you do not have a seat at the table, you're normally by default on the menu. So who wants to be at the menu, right? So there is the second largest economy. Do we all believe that the Chinese will not have, in their very long-term oriented view, a stance on saying, well, shall we not be with 1.4 trillion people a reserve currency like the Swiss franc? You know how many Swiss are on this planet? It's around 11 million. Just to let you know, put it in perspective, right? So the euro is certainly not, but I truly believe, yes, this is a fair chance in the next couple of years.
A lot of people brush off the concerns about the US losing reserve currency status. What do you tell those people? What are they missing?
Look, let's not getting into the drama mode, right? The US, just to be super clear, is one of the strongest economies worldwide. It had been a fantastic partner to Europe and to the rest of the world over the last 50 years. And I truly, truly believe there will be a more moderate approach going forward because you cannot screw all partners. And I don't think that's the intention by the US government at all. However, there are always ups and downs, and sometimes you win, sometimes you lose. I'm not saying that the US is losing out, but at the moment, I mean, the signals are rather at the wall and the signing is on the wall, that others can catch up. Structural overweight in US equities, questioning the dependency, questioning if income from foreign investors should get a separate taxation in the US. I mean, where do you think people will place their money? I'm not saying that they sell out the US equities or US bonds per se, but cutting back to a normal weight is more than a likelihood.
Section 899, I think, is what you're subtly referring to there in the tax bill. You know, it is very, very relevant to my next question, We have a 30-year bond auction in the United States tomorrow. Would you buy?
Given what I have said, yes, right, and partially no. So if you look at the 30 years bond, it was minus 36% over the last 30 years, right? It's mounting 5 point, whatever it is, 5 point.
Give or take, depending on the day.
I would still buy it.
Why?
As I have alluded to, right, the US is one of the biggest economies. They cannot allow to fail it. They have now a tendency where it comes, look, make America great again. I truly believe the answer must be from Europe, make Europe great again, right? I mean, if there's something we can borrow, mega sounds better than MAGA, but I truly believe there's opportunity, and let's get real, right? We need the US globally as well. So walking away and saying we replace everything from the US, that's social romance.
So we're looking at a market where fixed income was always considered safe, but it has been quite volatile in recent years, even the safest.
Which is great times for active investments, right? So.
Well, tell me what you think then. Equities or fixed income? Which do you prefer at this juncture?
I truly believe you need to prefer always equity, because it is where value creation happens, right? As an investor, if you think about our pension schemes globally, they are always underweighted in equities because the regulation says, oh, you need to be safe and need to generate income. But the value creation from capital markets perspective happens at companies where you invest into, and this is mostly equities, right?
So we were talking about regions then. Where do you think right now, and not in terms of geography, but in terms of opportunity? There are a lot of questions about whether AI has been overblown in a lot of areas. Do you find areas that will provide the best long-term risk-adjusted returns based on sector or other type of opportunity?
Absolutely. If you look at Asia, and if you do a deep dive on Asia and also on the AI side, I mean, what means overweighted? I think it's, if you look into our industry, everybody tells you, oh, we use AI, we analyze your portfolio so much better. And let's assume everybody is doing the same. It would be the same like ETFs. Can we assume for a moment, sorry that I do a detour. Let's assume we all invest into ETFs, right? You know how this is called? Socialism. No, I mean, sorry, the outcome is always the same for everybody in the room. So the beauty is, as an active house, you can really make choices. And coming back to your question, and sorry, I broaden it a bit, geographically, I mentioned Europe already, but Asia and the growth in Asia, especially China, Southeast Asia, and India, I truly believe this is one of the biggest opportunities for us. I truly believe also, if you think about the US as an asset class, which is reflected in the global benchmarks, China going forward will be an asset class for itself too, let's face it. Assume they have to really fund all their liabilities on the pension side. This has the potential to become, first of all, the biggest bond market, and secondly, they can really deal with themselves in terms of having 3 pillars on the pension side. If you then look into India, which is from an aging perspective, a very favorable market compared to Europe, to the US, or to China, by 2040, the average person is 30 years old. 2040, every out of 5, there's 1 person already in retirement. So I truly believe the wealth from India will come through the middle class and that younger generation. So those are the asset classes, the pieces we look at. AI, is this a big thing? Absolutely, but I think there's also other sectors on the health side where you can really, if you think about the aging population, longevity, health sectors, where you really can make good money for your customers.
And with our remaining time, I have 2 megatrends I want to ask you about. Private markets.
The tough ones? Okay.
Not tough per se, but ones you probably have to answer to. How do you embrace private markets from where you sit, longtime public market investor? What role does private markets play to you and your investors?
Look, private markets is a very important franchise to us. Out of our $620 billion US dollars, we manage 110 in private markets.
So in 10 years, what's going to be the mix?
We hopefully have reached the 175, 200. It really depends on I think the growth perspective per se, but if you look at growth markets, the private markets piece and creating accessibility to retail customers will be a huge thing. It will deliver you or less correlated income compared to the fixed income side, equity or multi-asset. And the beauty is it's also from a duration perspective, very often in line with the liability management you either have as a retail investor, right? Because you do savings for paying back mortgages, for the university, for your kids, for your old age provision. So it has really a very positive effect on the portfolios per se. And I'm very happy with the setup we have. Look, we are very big on infrastructure, which is $55 billion US dollars. We have a private credit and private equity book, which is technically the same amount. So we are well placed there. We don't do everything. We don't do real estate. So our franchise is without a real estate franchise per se. And I feel very comfortable where we are. And yes, we want to grow the business. And you also will see on the private credit side and with the debt within the governments, I truly believe public-private partnerships will become an even bigger and more important investment over the next decade.
You spoke about the opportunity for mergers and acquisitions to grow in that space particularly. How big are your ambitions?
Look, I truly believe we need to do the right thing for our customers. So it's a very customer-driven journey, right? If there's appetite, we want to grow. Ambitions at Allianz, you need to ask my CEO, because Oliver has very high ambitions for us as a group, and we just follow and will deliver, and stay tuned, and we will grow organically. We have a very strong parent company, which is investing a lot into private markets. We invest on behalf of our third-party clients as well. But other than that, I'm very confident that this is a very important asset class. And as you know, we never comment on rumors and speculation. I know it's part of your DNA, you have to ask it, but yeah. Stay tuned. I mean, we grow organically, which is great.
Absolutely is part of my DNA. Journalists must ask everything.
Absolutely.
So next megatrend, digital assets.
Mm-hmm.
What is your view?
Yeah, look, as everybody already has fallen in love with crypto, we gave ourselves a hard time and said, no, this is not for us. Why that? As a fiduciary manager, you cannot invest into, at least from a moral perspective, this is us being very traditional, but maybe boring is the new sexy. I don't believe in any kind of assets where there is no physical underlying, right? I mean, how shall I tell investors if it blows up, oh yeah, we did this on your behalf, but Tobias, where is the underlying? Yeah, look, there have been 3 colleagues working somewhere. So look, I truly believe there's enough opportunity if you think about blockchain, if you think about tokenization, also making illiquid assets liquid and investable. I think there are different and smarter ways than crypto, but maybe future tells me I'm right, and hopefully it doesn't tell me that I had been wrong on behalf of our investors. But as a fiduciary manager to crypto, we give it a pass to others.
Do you ever worry that the private markets, especially given the demand for tokenization and more retail involvement, that they might become too liquid, given the liquidity profile of the underlying assets?
It's a fantastic question, Sonali, because I truly believe over the next decade, the lines between public and private will start to blur. As the underlying will become, there will be similarities, let me put it that way. However, I truly believe as investors, we need to owe a big attention to these type of investments. We so far had no default in 20 years, which is speaking to the quality not only of the team, but of the products and the underlying. So we are, as I've said, maybe a little bit boring, but therefore we do not have to explain surprises, which is also great. And secondly, I believe that public markets will play absolutely the most important role, and private is not for everybody. So the retail investors don't want to afford, they maybe don't want to live with semi-liquidities. So I truly believe you need both, and this is the reason why we did build our franchise like it is, which is a quarter, a quarter, a quarter, and a quarter in terms of the asset base, which is quite rock solid.
Throughout the course of this conversation, I still keep thinking about that comment you made about safe havens. If the US is not a safe haven, if the dollar is not necessarily, what is a safe haven asset? For investors who are worried about risk in the world today, what are the ultimate safe havens?
If you look at Europe, despite whenever I get back from Hong Kong, right, or I'm traveling a decent time here in Asia, sometimes it feels like you come back home into a museum, right? Yeah, look, Asia, if you look at the skyscrapers in Kuala Lumpur, if you look at Shanghai, at the vibes, right, everybody said, whoa, whoa, whoa. China, I'm not sure where there is really a retail good shortage in mainland compared to Europe. So the reason why I'm saying I truly believe Europe and Asia at the same time will step in and create maybe the second and third, equally then only the second, safe haven to the US dollar.